Hello, good afternoon. You're watching Market Fatafat on ET Now. Festive greetings to all our viewers from Cheryl, myself, as well as the whole team of ET Now. But market's not much on the cheery mode today, right, Cheryl?
Absolutely, Vinny. First of all, happy Dhanteras to you, all of our viewers, and yes, festive greetings as well. Talking about the markets, yes, actually mirroring my shade, at least the first half of the trading session. Right now, we have actually come back and we've actually regained some lost mojo. At the day's highest point right now, when you talk about the benchmark indices, we have actually come to the positive territory. Let's take a look at what Nifty Bank is doing, because that one was seeing similar moves like the benchmark indices. Nifty Bank as well, 0.2% uptick coming in for Nifty Bank. If you look at the advanced decline ratio, as of now, it's tilted a tad bit to the gainers, Vinny. So yes, you are seeing some shift in the sentiment coming in with the small cap index at the day's highest point with 0.5% uptick.
Absolutely, but on that note, we have a lot of earnings going on and we can see some of them flashing on our screens as well. But let's talk about Moil. We saw a good set of numbers reported by the company, especially a strong growth in terms of revenue, operational performance quite strong as well. Let's bring on board Mr. Ajit Kumar Saxena, CMD at Moil, joining you with us. Thank you so much, sir, for joining you with us this afternoon on ET Now. Let's just talk about margins, right? When I'm seeing your margin trends, from last year, we've seen that growth coming in. Specifically, Q2 was just 14% in FY23, and today it's at 28%, your margins. So in terms of the sustainability of margins, what is aiding the margins this time? Could you talk about that?
I expect margins to be sustainable because if you talk about prices, that it has really come down in the last 18 months, but the volumes are supporting us. So these margins are sustainable, and perhaps it will go up from this point. That's what they are doing.
Mr. Saxena, this is Cheryl also joining in the conversation, and let's talk about the manganese prices, because if you look at that declined about 20% in the first half of the fiscal year itself, and which may have had an impact on your numbers as well. If you could tell us what's the trend that you are witnessing now that we are in the H2 of FY24, what sort of a trend are you seeing when it comes to the manganese prices, and also are you expecting it to inch higher?
Yeah, we expect it because in the second half, normally after festive season, steel markets and other markets do grow. So we expect a upward trend from this position.
From here on, so overall then does that indicate in terms of when I'm looking at it a bit sequentially in terms of the numbers, a bit muted. So for overall the demand trends that are shaping up, and second half of the year, what is the revenue expectation that one could have from the company?
We expect somewhere around 1700 plus this year.
Right. Also, just then in terms of, if you could talk to us about, you did record that production, registered a record production and sales in Q2, as well as the first half of FY24. What is the production and sales guidance then for the full year of FY24 as well?
Production, we expect to somewhere around 17.6 or 18 lakh ton. And so is the sales. And prices are also, even with the no prices, we are able to market. My marketing sales force has registered, I think, around 54% growth over the previous year. So market is not an issue. Prices are okay. Yes, it is down, but still we are able to sell.
Let's talk about the recent policy change that we've seen. Actually, Cabinet has given a nod to the Mines and Minerals Act 1957, whereby commercial mining of 6 critical minerals, including lithium, will be allowed now. Is Moil interested in getting into mining of any of these materials, mines and minerals?
Very much. We are exploring new elements as well as new geographies in the different places as well as the different minerals. We are really interested.
Okay, thank you so much, Mr. Saxena, for joining in with us this afternoon, giving us an understanding and looking out for more updates coming in from Moil going forward as well. Thank you so much, sir, and festive greetings to you as well. But on that note, we're going to slip into a very short break, and as we step into this new Samvat, ET Now brings you a whole host of market insights to decode what is in store for the new year. So this Diwali, get ready, taiyar hokar aaiye, and stay tuned in for a very special programming.
Welcome back. You're watching Market Fatafat on ET now, and let's bring on board the management of Samvardhana Motherson. We have Mr. Pankaj Mittal, who is the Chief Operating Officer of SAMIL, as well as Mr. Kunal Malani, who is the CFO at SAMIL. Very good afternoon to both of you gentlemen. Thank you so much for joining us on ET now. And also, if let's talk more about SAMIL's number in the quarter gone by. And if you look at your numbers, actually good growth across when you see on a year-on-year basis. But when you actually see the margins, they've actually been stuck in the range of around 8 to 9%. And at least this has been the trend for the last 5 quarters, be it the auto ancillary industries. We've actually seen companies' margins increase. If you could tell us what's actually keeping SAMIL growing that margin figure?
Look, I think, first of all, please do appreciate this is seasonally the quarter where there are summer shutdowns in Europe. So traditionally, the volumes are lower. It is also the period where there were volatilities on account of supply chain with one of the customers in Europe. And there were strikes in UAW, which also impacted volumes. So to that extent, there was impact that had on the top line and correspondingly on the bottom line. We, however, have to keep our costs the way it is, and hence these short-term volatilities we cannot manage in that regard. Also, this quarter we got 4 new acquisitions. Again, August is the summer shutdown period, so you're only seeing effectively 2 months of performance, and that also in a seasonally weak quarter as it is in Q2. So the way I see it is on a year-on-year basis, we have grown quite substantially. The EBITDA, absolute EBITDA has grown to 34%. Revenues is 28%, and PAT on a normalized basis is nearly 40%. So in our view, it's been a fairly decent quarter given just the volatilities all around us. On the percentage margin, as we have often said again and again, please track us on absolute margins and not percentage. We are an ROC-focused company. We're not a percentage margin-focused company. And hence our endeavor has been to improve our ROC, and given the growth that you're seeing on year-on-year basis, our ROCs have also grown correspondingly. So hence I think it's a fairly reasonably good quarter.
Right. Mr. Mittal, also what is trending right now is whether you look at premiumization, the EV trend, that's been driving the growth in the industry. What are the growth levers that the company sees and they have identified from the cells? And, being one of the biggest players and largest players in the auto ink industries, what do you think will lead the growth next now?
As a company, we are a powertrain agnostic product manufacturer. Most of our products go into every vehicle, be it a BEV vehicle, be it an ICE vehicle or a hybrid vehicle. So whichever kind of choices the customers would make in the future, our products would remain with them. Secondly, we have been growing geographically as well as into different products. So you see our 3CX10 direction has been very, very helpful for us. Thirdly, wherever the customers require solutions, so our vision for a very long time has been to be a globally preferred sustainable solutions provider. So we have either developed new products, gone into new geographies as an organic greenfield site, or through acquisitions. So all the different ways of providing solutions to the customer have been the direction for growth. And we believe that in the coming years, the growth is only becoming better and better, and we provide more and more solutions. As a group and as a company, when you look at us, we have also invested into new areas of growth, be it aerospace or health vertical, and you would have seen that many of our acquisitions are transformative in these new areas as well.
Right. Let's talk about your CAPEX guidance for the entire year, and it will be very heartening to know that you've actually increased your CAPEX guidance to about 4,500 crore rupees as envisaged earlier for around 3,000 crore rupees or so. If you tell us why such optimism, or why such a faith in actually going ahead and building more capacity as well, if you could tell us where exactly or which areas exactly are you going to go ahead and invest more?
See, as we have mentioned, that more and more facilities are also coming in the emerging markets, which includes India in a very big way. So we had earlier said that we would be setting up 6 new facilities. Now it's revised to 10. Our customers have also announced a lot of growth plans, as you mentioned in India. All the automakers are our customers, and they are putting in more and more facilities. And we are one of the key partners to them and a trusted partner. So we are also setting up more and more facilities to support them.
Right. Kunal, there are some concerns that are there regarding your debt levels. Now, to fund your capex and to manage the working capital needs, you will be raising some money. So, does that mean, and you have also revised your capex as well. So, how do you see the net debt to EBITDA trending in the second half of FY24 now and beyond that as well?
So, look, I think first of all, this is by design. We announced, 15 acquisitions. We've closed 4 of them in this quarter. The payout of those 4 is, 3,800 odd crores have been paid for these acquisitions. And then we have gone and seen a lot of organic opportunities, as Pankaj was just mentioning, specifically in India, which is causing the bloating up of the capex as well. So we spent around about 1,300 crores of capex in this quarter on that count. So these growth opportunities in these times is actually showcasing the strength of the business model that we have at one end. At the other end, when you think from the leverage itself, our financial policy was 2.5 times net debt to EBITDA. We are still at 1.9, and even with whatever revised capex guidance that we have given of 4,500 crores, as the new acquisitions will get integrated, as we start synergizing with some of them, typically quarter 3, quarter 4s are much better than quarter 1s, quarter 2. That's how you can see traditionally the business has played out. As the margins expand, I wouldn't say ROC expands, or absolute values expand. In our view, the leverage ratio will decline from here on. So by March, we think it should be somewhere back to those 1.6 odd levels, give or take, depending how the world markets played out.
All right. On that note, we leave it there, gentlemen. Thank you so much for joining us on ET Now to talk about the quarter gone by for SAMIL and also the areas that you're going to look at investing further. And that was the management of SAMIL talking about their earnings. And talking about earnings, take a look at the bottom of your screen. You have Hindalco that's come up with the numbers. And yes, the reason why you're seeing that dip actually come in the stock price is because it's come below estimates. If you look at the revenue, however, it's above ET Now estimate, but the EBITDA as well as EBITDA margins are much below ET Now estimates. We're expecting the EBITDA margin of around 10% is coming at around 8.5%. And if you look at the revenue figures, it's come in at around 20,676 crore rupees. It's a 12% uptick on a year-on-year basis. If you look at the profit, it's come in at around 847 crore rupees, an uptick of as much as 54% on a year-on-year basis. No doubt we were expecting the profits to come somewhere close to those levels itself, but it is the EBITDA and the margins that have come below estimates, and there you go. The stock is actually seeing that reaction, 0.5% downtick coming in for Hindalco. But on that note, we'll slip into a break, but as we step into a new somewhat, ET Now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar hoke aaiye, and stay tuned for a very special programming.